Brookfield CEO Bruce Flatt just dropped a bombshell on CNBC, saying, the US government is buying $80 billion worth of nuclear plants from us. We're building a whole new nuclear industry in America. This deal, he says, could change everything. Here's the plan for today's video. I'll play the clip of Bruce Flatt laying out the $80 billion nuclear push, and why scale, not just dollars, is the real game. After the clip, I'll give you my reaction and a deep breakdown of what he really means when he talks about rebuilding supply chains, public-private partnerships, and how AI and data centers are driving historic power demand. Finally, I'll walk you through 3 AI energy stocks I'm watching that could benefit the most from this megatrend, with the reasons I like them and the key metrics I'm watching. If you only watch one video today, make this it. This isn't just corporate talk, it's a potential roadmap for where energy and infrastructure capital are heading for the next decade. Hit like if you want more videos like this. Let's push for 1,000 likes, share this with friends who follow energy or AI, and drop your take in the comments. Don't forget to subscribe so you don't miss the stock breakdown. Alright, let's cue the clip and hear what Brookfield's CEO has to say.
President Trump and Commerce Secretary Lutnick announced a number of deals for the Japanese fund to invest in the United States, and the one that we're involved in is an $80 billion investment into new nuclear plants in the United States. And we're super excited about this, and probably the most important thing isn't the $80 billion, but we needed to have scale to be able to build supply chain across America. And the nuclear industry had gone downhill, and just nobody was building plants. And to be able to build the first one, you need to have the belief in, and the supply chain needs to believe that you're going to build out the whole business, and it's going to sustain itself for a long period of time. So the whole idea behind this is that we're going to build out the new industrial platform for nuclear in the United States. And all the suppliers will build it out, and we'll be able to have a whole new business in America based off of nuclear, and that's why the U.S. government is backing it, and we're very excited about it.
How is it structured? So do you line up financing?
So the U.S. government is buying $80 billion of plants from us. And
from Westinghouse, which you own a little bit less, or a little more than 50%?
We own half of it.
Okay.
And with our partner Cameco, and so Westinghouse will build all the plants. The U.S. government will own them, and
so they're financing.
They're going to be financing them, and so we're just going to be the builder of those plants. Whereas on last week we announced another transaction, which is with South Carolina. And we, Brookfield, are going to be buying the plant. Westinghouse will be reviving the plant and rebuilding it. And we will actually own that plant with a number of our clients.
Is this the new way that you're sort of thinking about structuring deals? I mean, this whole idea of public-private partnership with the U.S. government really taking some big swings is new.
Look, I just think this government is focused on less regulation, more business, lower taxes. And they also want to, if they're going to lean into investments, if you can convince them that we're going to reindustrialize a business in America, they're going to be behind it. And but they want the people of America to participate if there's great success. And I have no problem with that. And this is just, I'd say it's more entrepreneurial than it might have been in past. But I think the U.S. people definitely are owed something if they help us achieve what we want to achieve, and equally so, we'll get our share too, because it should be very successful for us.
How long will it take to build these nuclear reactors?
You know, the first one that we're going to build in South Carolina is a rebuild, and it'll be on by 2030. These other ones will take 6, 7, 8 years, but you need to start. But what the hope is, that as you keep building and as you build supply chain and you get more experience, we're going to be able to bring the time down over time. And I think over time we're going to get better and better at it. We used to be in America, we used to be really good at building plants. We lost that, and this is going to re-energize the whole business.
It is interesting that you bought Westinghouse out of bankruptcy back in 2018. What did you see that nobody else did at the time as far as the future of nuclear energy?
Yeah, look, it's base load, it's clean, it's extremely efficient, it's very safe today, and because of that, it was going to be needed in the world. And it was inevitable. It was going to be needed. It just took a revolution in artificial intelligence for everyone to figure out, yes, we have to have it. Because remember, what we're going to do is double the grid the energy use in the next 15 years. Double. It may be more than double. And we're going to need all the power we can get.
Yes.
We need solar, we need gas, we need nuclear, we need hydro, we need all of it. And it's going to be extremely important that we focus on it. And so when we invest into it, because our business is about looking at things, seeing a long-term vision, making sure you protect your downside, and usually the good things take care of themselves.
So hence the Bloom Energy deal, which was also announced a few weeks ago. Fuel cells, I mean, it's all about what you're talking about, the demand for power, which is skyrocketing.
So the data centers used to be, when we built data centers 10 years ago, they were 50, 100 megawatts. Today, we have customers taking 1 gigawatt from us for one data center. So these were enormous amounts of power required, and the capital, why this can only be done by a certain few, is the capital for that. If you take 1,000 megawatts or 1 gigawatt of power, the building and the infrastructure and the chips and the servers that go inside of it for an AI factory is $50 billion. This is a lot of money, so it can't be done by everyone. There's few, but not that many, and it's highly sophisticated. And people always talk about, is there too much?
Right off the bat, Bruce Flatt introduces a massive deal, an $80 billion commitment to build new nuclear plants in the U.S. This isn't just another infrastructure play. He stresses that the sum itself isn't the real magic. It's the scale that matters. He says you need enough capital to rebuild the supply chain across America, to resurrect an industry, nuclear, that had gone downhill, in his words, so that the first plant isn't a one-off, but part of a broader, sustained industrial platform. In other words, Brookfield isn't just building reactors, they're building the ecosystem around reactors. Think suppliers, logistics, industrial labor, permitting, long-term service. That's the blueprint. Now, Flatt moves into how the deal is structured. He says that the U.S. government is buying $80 billion of plants from Brookfield and its partner, via their stake in Westinghouse Electric Company. Brookfield owns a little less, or a little more than 50% of Westinghouse, and via a partner handles the rest. He clarifies, Westinghouse will build the plants, the U.S. government will own them and finance them, and Brookfield will just be the builder. Then, he contrasts that with another transaction. In South Carolina, Brookfield is going to buy the plant, Westinghouse will rebuild it, and Brookfield will own it, with clients. So you have one deal where Brookfield is builder on behalf of the government, and another where Brookfield is owner-operator alongside the build. This dual structure is interesting because it shows flexibility. Sometimes you're contractor, sometimes you're owner. That matters when you're dealing with risk, returns, regulatory profile. Flatt then frames this as part of a new way of structuring deals, public-private partnerships where the U.S. government is willing to take big swings. He notes, the current U.S. administration is focused on less regulation, more business, lower taxes, and if you can convince them you're going to reindustrialize America, they'll back you. He phrases it as entrepreneurial, and emphasizes that U.S. citizens should participate in the success. Meaning, you build big, you do well, but it's more than just private profit, it's tied to national economic goals, supply chain revitalization, manufacturing, jobs. Brookfield apparently is okay with that dynamic. They'll get their share, but the broader national benefit is part of the deal. Next up, timing. Asked how long it will take, Flatt responds, the first plant in South Carolina is a rebuild, and will be on by 2030. The others will take 6, 7, 8 years, but he also reiterates that as you build more, with experience and supply chain in place, the timeline will shrink. His claim, America used to be really good at building plants. We lost that. This is going to re-energize the whole business. So underlying this is the idea that America has lost industrial capability in this space, and Brookfield sees a window to bring it back, not just as a builder of one project, but as a revival of that capability. Then he switches gears. Why Westinghouse? He says nuclear is baseload, clean, extremely efficient, very safe today, and that the world will need it. He ties in that we are going to double energy use in the next 15 years, or more, and that to meet that you'll need solar, gas, nuclear, hydro, everything. So for Brookfield, the investment question is looking long-term, see the trend, protect the downside, let the upside come, and as an example of expanding the platform he mentions a recent fuel cell deal with Bloom Energy, and the fact that data centers now demand enormous power loads, thousands of megawatts, or 1 gigawatt plus, which itself has capital intensity of tens of billions. Big power plus, big data plus AI, one enormous infrastructure. and only a few players can do it. So what do I think? First, this is a very bold vision. Brookfield is essentially saying, we are playing at the scale of national strategy, not just private investment. They want to rebuild a U.S. industrial ecosystem around nuclear power and capture multiple layers. Build, supply chain, ownership, operations. That means higher upfront risk, construction risk, regulatory risk, supply chain risk, but also potentially very significant long-term earnings and strategic positioning. For an investor, this is a signal that Brookfield is shifting more into strategic infrastructure of the future rather than just picking deals. They are partnering with governments and assuming large commitments. Second, the timing and risk matter. He gives 2030 as the first target. That's 5 years out. Remember, it's 2025 for the rebuild, longer for the rest. That means this is not near-term returns. You're in for the long haul. The supply chain revival, regulatory approvals, construction times, cost overruns, all those historical risks in nuclear obviously apply. But Brookfield is aware of this. They say they protect the downside and wait for the good things to take care of themselves. That means they expect the trend, massive demand for power, clean baseload, AI data centers, to play in their favor. Third, the government role is massive. The U.S. government buying the plants and financing them reduces part of the risk burden. Brookfield as builder means they don't carry as much ownership risk in that structure, at least in the first deal. The second deal, where they do own, gives them more upside, but also more exposure. That mixture shows they're diversifying how they approach the sector. Fourth, for you, if you are tracking Brookfield or investing in infrastructure, this interview tells you to watch these axes. Nuclear build-out, especially via Brookfield Westinghouse, AI data center power demand, supply chain investments in manufacturing, and public-private frameworks with large-scale government backing. These are where Brookfield is placing its bets. Finally, my key takeaway is that Brookfield is doubling down on a theme of building the backbone of the new economy: power, infrastructure, data centers, and using nuclear as a high-stakes, high-entry barrier play. They want to be one of the few who can handle billions, decades, government interface. So if you're looking at their strategy, you should see this as a long-term structural play, not a quick win. Alright, that's my breakdown. If you found it helpful, drop a like, subscribe, and let me know in the comments. What do you think the biggest risk is to this nuclear build-out? Cost overruns? Regulatory change? Supply chain bottlenecks? This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. 3 AI energy stocks I'm watching that could benefit the most from this megatrend. First up is Cameco Corporation, ticker CCJ, often called the Saudi Arabia of uranium. If you're looking for a company that sits at the very heart of the global energy transition, Cameco is it. This isn't just another mining stock, it's a strategic powerhouse controlling a resource that's becoming more critical by the day. As AI data centers multiply at a staggering pace, the world's appetite for electricity is exploding. These facilities run 24/7, demanding a constant, reliable supply of power. Traditional renewables like wind and solar can't always deliver that steady baseload, especially when the sun isn't shining or the wind isn't blowing. That's where nuclear energy comes in. It's the only scalable, carbon-free solution that can provide uninterrupted power, day and night, rain or shine. And at the core of every nuclear reactor, uranium, the essential fuel that keeps the lights on in our digital world. Cameco stands as one of the world's largest and most reliable uranium producers. Their portfolio includes some of the highest-grade mines on the planet, primarily in Canada's Athabasca Basin, a region renowned for its rich uranium deposits. But Cameco's reach is global, with operations and partnerships that span continents, ensuring a steady supply chain even as geopolitical tensions rise. What sets Cameco apart isn't just the scale of their mining. They're a vertically integrated powerhouse, managing every step from extracting uranium ore to processing it into nuclear fuel. This integration gives them control over quality, costs, and delivery, making them a trusted partner for utilities worldwide. Recently, Cameco took a bold step by acquiring a significant stake in Westinghouse Electric, a legendary name in nuclear technology. This move expands Cameco's footprint beyond mining into reactor design, engineering, and maintenance. It's a game-changer, creating new, stable revenue streams and deepening their influence across the entire nuclear value chain. Why is all this so important right now? Because the price of uranium is on a tear. As countries scramble to secure clean, reliable energy, demand for uranium is outpacing supply. Governments are stockpiling, utilities are locking in contracts, and investors are waking up to the strategic value of this metal. Cameco, with its scale and reputation, is perfectly positioned to ride this wave. Their high-grade mines mean they can produce uranium at lower costs than most competitors, translating to higher profit margins. And as demand surges, Cameco has the capacity to ramp up production quickly, something few others can match. This flexibility is a huge advantage in a market where new supply can take a decade or more to bring online. The uranium market is notoriously tight. Building a new mine isn't just expensive, it's a regulatory and logistical marathon that can stretch for years. That means existing producers like Cameco hold the keys to the kingdom, able to meet rising demand while others are still stuck in the permitting process. Public perception of nuclear power is also shifting. Once controversial, nuclear is now being embraced by governments and even environmental groups as a vital tool for decarbonization. The narrative is changing from fear to opportunity, and Cameco is at the center of this transformation. In the U.S., landmark policies like the Inflation Reduction Act are pouring billions into clean energy, with nuclear getting a significant boost. These incentives reduce risk for companies like Cameco, encouraging investment and long-term planning. It's a tailwind that's only getting stronger as energy security becomes a top priority. Another key strength? Cameco's long-term contracts with utilities around the world. These agreements lock in sales for years, insulating the company from wild swings in spot prices and providing a stable, predictable revenue base. In a volatile market, that kind of certainty is gold. Financially, Cameco is rock solid. Revenues are climbing, cash flow is robust, and the balance sheet is healthy. They've weathered past downturns and emerged stronger, positioning themselves to capitalize on the next phase of nuclear growth. The global energy grid is being rewired for a low-carbon future, and Cameco is the go-to supplier for both traditional reactors and the next generation of small modular reactors. These new designs promise safer, more flexible nuclear power, opening up fresh markets and new revenue streams. Geopolitical tensions are also reshaping the uranium market. Western countries are increasingly wary of relying on unstable regions for critical resources. Cameco's Canadian base gives it a huge credibility boost, making it the supplier of choice for nations seeking secure, ethical uranium. Of course, there are risks. Uranium prices can be volatile, and mining always comes with operational challenges. But Cameco's diversified assets, experienced management, and proven track record help them navigate these hurdles better than most. Bottom line, Cameco is the foundational pick-and-shovel play for the AI-driven energy revolution. As the world electrifies and digitalizes, the demand for clean, reliable power will only grow, and Cameco is uniquely positioned to deliver. As AI's power needs soar, Cameco holds the keys to one of the only energy sources that can keep up: nuclear. Their expertise, assets, and global reach make them indispensable in the new energy landscape. That's why Cameco is my first stock on the list, a true kingpin in the race to power the future. Next, let's talk about Oklo, ticker OKLO, a bold bet on the future of nuclear energy, and a company that's aiming to completely transform how we think about power generation in the 21st century. While most people associate nuclear with massive expensive plants and decades-long timelines, Oklo is rewriting the script with a radically different approach. Oklo is developing advanced micro-reactors, compact, factory-built, and ultra-safe units that can be shipped and installed almost anywhere. These aren't your grandfather's nuclear plants. Instead, they're designed to be plug-and-play solutions, capable of powering everything from remote mining operations to the world's most demanding data centers. Their small size and modularity mean they can be produced at scale, reducing costs and deployment times dramatically. What truly sets Oklo apart is their Aurora reactor's ability to use recycled nuclear waste as fuel. This is a game-changer. Instead of treating spent nuclear fuel as a dangerous liability, Oklo turns it into a valuable resource, extracting more energy from what would otherwise sit unused for thousands of years. This not only addresses the nuclear waste problem, but also makes their reactors more sustainable and appealing to both regulators and customers. Oklo's business model is just as innovative as their technology. Rather than simply selling reactors to utilities or governments, Oklo plans to own and operate their micro-reactors, selling clean, reliable power directly to customers through long-term contracts. This power-as-a-service model gives Oklo recurring revenue and allows customers to lock in predictable, carbon-free energy costs for years to come. It's a win-win for both sides. Their primary targets are data centers and industrial users, businesses that can't afford power interruptions and are under increasing pressure to decarbonize. Data centers in particular are hungry for energy, and as artificial intelligence and cloud computing continue to expand, Their demand for reliable, on-site, carbon-free power is only going to grow. Oklo's ambitions are backed by some of the biggest names in tech. Sam Altman, CEO of OpenAI, serves as chairman and is a major investor. His involvement isn't just financial, he's helping Oklo focus on solving one of the biggest challenges facing AI, the enormous energy requirements of next-generation computing. As AI models become more powerful, the need for clean, scalable energy solutions becomes critical, and Oklo is positioning itself at the center of this revolution. The modular design of Oklo's reactors is another key advantage. Think of it like building with Lego blocks. Customers can start with a single unit and add more as their energy needs grow. This flexibility is a huge selling point for fast-growing industries, allowing them to scale up without the massive upfront investment or long construction timelines of traditional power plants. Of course, Oklo isn't without challenges. The company is still pre-revenue and faces significant regulatory hurdles. Nuclear power is one of the most heavily regulated industries in the world, and getting new reactor designs approved is a complex, time-consuming process. However, the U.S. government is now actively working to streamline approvals for advanced reactors, recognizing the urgent need for clean, reliable energy sources in the fight against climate change. Oklo's first project is already underway in Idaho, where they've secured a contract with the U.S. Air Force. This partnership not only validates their technology, but also provides a crucial early customer, helping Oklo demonstrate the real-world potential of their micro-reactors. The Idaho project could serve as a blueprint for future deployments across the country and around the world. The potential market for Oklo's technology is enormous. Data center power demand alone is projected to double by 2030, driven by the explosive growth of AI, cloud computing, and digital infrastructure. Oklo's micro-reactors are tailor-made for this surge, offering a scalable, clean, and reliable solution that can be deployed wherever it's needed most. For investors, Oklo represents a classic high-risk, high-reward opportunity. The company's progress with regulators, the signing of new contracts, or successful deployment of their first reactors could send the stock soaring. But setbacks, whether technical, regulatory, or financial, are also possible, and the path to commercialization is far from guaranteed. What gives Oklo a real edge is its leadership. The company was founded by MIT-trained engineers Jacob DeWitt and Caroline Cochran, who bring deep expertise in nuclear science and a passion for innovation. Their world-class team combines technical know-how with entrepreneurial drive, giving Oklo a fighting chance to commercialize this breakthrough technology and change the energy landscape. If Oklo succeeds, the impact could be transformative. Imagine a world where tiny, safe reactors quietly deliver clean energy to every corner of the globe, powering AI, industry, and entire cities with zero carbon emissions. Oklo's vision is to make this a reality, redefining how we power the digital age and helping to solve some of the world's most pressing energy challenges. For investors with a long-term perspective and a taste for innovation, Oklo offers a rare chance to own a piece of the future, a future where clean, reliable, and scalable nuclear power could become the backbone of our digital and industrial world. Finally, let's take a deep dive into Constellation Energy, ticker symbol CEG, a company that stands as the nation's clean energy powerhouse and a true giant in the rapidly evolving energy landscape. As the world pivots towards sustainability and decarbonization, Constellation is uniquely positioned at the intersection of technology, policy, and infrastructure, making it a critical player in the future of American energy. Constellation operates the largest fleet of nuclear power plants in the United States, a network so vast that it generates about 10% of all American clean energy. These facilities are the backbone of the nation's carbon-free electricity supply, running around the clock to provide reliable, emissions-free power to millions of homes and businesses. As artificial intelligence, cloud computing, and data centers drive up electricity demand at an unprecedented rate, Constellation has become the go-to provider for reliable, carbon-free, baseload power. Data centers, which are the digital factories of the modern world, require a constant, uninterruptible flow of electricity, something only a handful of energy companies can guarantee at scale, and Constellation leads the pack. Nuclear plants, once dismissed as relics of a bygone era, are now being reevaluated as strategic national assets. In a world desperate for clean, reliable energy, Constellation's nuclear fleet is more valuable than ever. The company owns and operates more nuclear capacity than any other U.S. utility, giving it a unique edge as the energy transition accelerates. The Inflation Reduction Act has been a game-changer for the industry, providing a price floor for nuclear power and ensuring profitability and stability for years to come. This landmark legislation not only supports existing nuclear plants, but also incentivizes further investment in clean energy infrastructure, making Constellation's business model more resilient to market fluctuations. Constellation is already capitalizing on this favorable environment by signing long-term power purchase agreements with tech giants like Microsoft, Amazon, and Google. These deals directly power new and existing data centers, locking in revenue streams for years and cementing Constellation's role as the preferred partner for the digital economy. Their unmatched scale and reputation for reliability allow them to command premium prices for 24/7 clean energy, a product that's increasingly rare and valuable as more companies commit to net zero goals. Few others can offer this combination of constant supply and zero emissions, making Constellation services indispensable. The result? Expanding profit margins, surging free cash flow, and robust shareholder returns through a combination of regular dividends and aggressive share buybacks. Constellation's financial discipline and focus on shareholder value have made it a favorite among institutional investors seeking both growth and stability. But Constellation isn't just resting on its laurels. The company is investing heavily in next-generation technologies, including small modular reactors and green hydrogen production. By leveraging their existing nuclear plants as clean energy hubs, they're positioning themselves at the forefront of the next wave of innovation in the energy sector. Financially, Constellation is a cash flow machine, boasting a track record of consistent growth and strong earnings guidance. Their balance sheet is healthy, and their forward-looking strategy is designed to capture the massive opportunities emerging from the electrification of everything, from transportation to industry. The risk profile here is relatively low compared to early-stage startups. While there are always potential challenges, such as regulatory changes or operational issues, Constellation benefits from strong bipartisan support for nuclear energy in Washington. This political backing provides a crucial safety net and reduces the likelihood of disruptive policy shifts. Unlike traditional fossil fuel utilities, Constellation is already a leader in clean energy, giving it a significant head start as the U.S. grid transitions to a low-carbon future. Their ability to integrate renewables with nuclear power creates a flexible, resilient energy mix that's hard to replicate. The stock's current valuation reflects its recent growth, but the coming surge in AI-driven electricity demand is only just beginning to be priced in. As more companies and industries electrify, Constellation's addressable market will continue to expand, offering further upside for investors. Think of Constellation as the toll road for the AI revolution. Every new data center, every cloud server, every digital service needs their power to function. As the backbone of the digital economy, Constellation collects a fee every time the world's data flows. For investors, Constellation offers a rare combination, a stable, blue-chip way to play the explosive growth of the AI energy boom, while also providing the reliability and income of a traditional utility. It's a compelling blend of growth, stability, and future-proofing. In short, Constellation Energy is the cornerstone stock for the future of energy, a company that's not just keeping up with the times, but actively shaping what comes next. There you have it. 3 ways to invest in the biggest bottleneck of the AI revolution: energy. Cameco, the uranium kingpin; Oklo, the disruptive innovator; and Constellation, the clean energy behemoth. Each offers a unique risk-reward profile, from commodity play to future tech to blue-chip operator. The AI story is about more than chips. It's about the infrastructure powering it all. Want deeper analysis and real-time trade alerts? Join the StocksGalore Patreon, link in the description. Which of these stocks do you think has the most long-term potential? Drop your thoughts in the comments. Don't forget to like, subscribe, and I'll see you in the next one.